Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with man, myth, the legend, Mr. Matt, the mortgage guy. How you doing, buddy?
I'm good, Mike. How you doing?
Well, it happened. Something that I thought would transpire after yesterday finally happened. Yesterday we closed, I heard, at the cycle peak, which was 6.28. We are now above it. We now have a new cycle peak. So tell us what it is, what happened, when it happened, and let's just wrap about it a little bit.
Sure. Yeah. Rates have gotten worse. If for those that weren't paying attention, when inflation comes in hotter than expected, the Fed starts talking. The 100 basis point rate hike gets put on the table. All these things have upward pressure on mortgage rates. So after we saw the high of 6.28 for kind of a national average back in June, rates retraced, and for a moment in time in August, we were below 5%.
We were.
Saw people saying, oh my God, like 4.99 just felt glorious as far as the interest rate. In August, here we are on September 14th, exactly 3 months from that last peak. We set a new peak at 6.3%. This is the national average that Mortgage News Daily puts out. It's a good, kind of barometer for 30-year fixed, good credit. Could probably find lower rates, work with a mortgage broker, but I'll leave that to people to find us on greatmortgagebroker.com. So as far as what this means, it's the affordability issue for first-time home buyers and for people coming to me looking to buy gets worse as rates go higher.
Yeah.
Demand comes down when things are less affordable. And so if you didn't like it at 5.875 and you didn't like it at 6, you're not going to like it at 6.3.
Yeah, this is part of my, again, when you look at the housing market and you understand the economy, you've got to put a lot of things together. And I think it's just all headwinds for the mortgage market, right? I think we talked about this last week. I now believe that the Mortgage Business Daily read, now that it's taken out the high, which was a kind of acted as a threshold or a ceiling, it's now become support on the other end. I actually think we see something this year with a 7 on it.
I hope not. Last time I try to speak things into existence, Mike, and so I just told you for the sake of my buyers.
Yeah.
And it's an interesting dynamic too, because in this interesting market that we're in, albeit the average is 6.3, with the average seller concession also being on every deal.
Yeah.
I've got buyers that are locking in at 5.3, 5.5. It takes a buy down to get there, but the buy down's available where it's available from the seller. I think
let me be very clear. This is why you have to work with a professional, right? We're talking about national average and statistics. If you're going to work with someone, and he's on this channel for a reason, he can help you get lower than the average, right? Assuming different things. So please, greatmortgagebroker.com, reach him out, just see if he can help you.
Yeah.
But yeah, I don't have, again, this back to video number 1. I think winter is here. It's going to be ugly. Buyers and sellers not are going to agree, and rates are going to go up, and affordability is going to go down. And then we're going to get to next year and see what's what. It's I have no idea when March in the spring selling season, because I think this is going to be the first real natural spring selling season in 2 years. And dude, I don't know. I don't know where rates are going to be. Unemployment's going to be.
Yeah, we've got 6 months worth of like what ifs where we can't truly predict it. But one thing what's really interesting, Mike, I'm going to send you a screenshot of this via email or something. I have a large enough business where I can kind of track trends. Yes. And I can look at applications per week. I'm looking at total apps week on week. Not a national average, Matt, the mortgage guy,
Yeah.
And it's funny because I'm looking back to June, and rates go up, and I go from 45 applications 1 week to 40 to 30. Then what's the next one? 41, 27. Coming into August, where we saw rates go down, 47, 68. So I've got a week where there's a big uptick, and now over the last few weeks rates have come back above 6, 42, 33, 37. And, you know, there's more homes to buy. There's more opportunity, but the demand is coming down because, you know, affordability is an issue.
Yeah, it's really funny because, again, I talk to you every Wednesday. I talk to Beth on Tuesdays, I think, and we basically have come to the agreement that 6% is the psychological number. When 30-year money is over 6, buyers retreat. When it got under 6 and then got under 5 for a moment, so we've learned there are buyers at 4.99. We don't have to go back to 2. It's 4.99. So that's the big question I have is when we get to March, could rates be at 4.99? They could. I have no idea. They could also be at 6.99. No idea.
Yeah.
But I do know winter is going to be rough.
Yeah. And I mean, like, being as big of an optimist as I am, I'm still a realist, and I realize the stuff that's coming out of the mouth of the lever pullers, you know, i.e. the Fed, is we're going to see some pain. You know, the housing market needs a reset. You know, all these things that are being said, like if they mean what they say, we will keep rates anchored high if that's what it takes to pull down inflation, to get, you know, affordability under control, all these other things. And so, like, it wouldn't surprise me. But like you said, every economic factor matters, you know, wars, inflation, all this other data. So over the next 6 months, it's more important than ever to pay attention. And if you're not personally paying attention, be around some folks that are paying attention. Start listening to some folks that are paying attention. Mike's paying attention. I'm paying attention.
Yeah. The one thing that's interesting, I love that fact that we talk on Wednesday, because every week Mortgage Business Daily, I think, puts out a report that CNBC shares, which I read. And it's very interesting because it's funny. Omar and I talk. He's my Tuesday entrepreneur. And I said, Omar, he's a flipping business. He's probably doing too many flips. He's got too much inventory, probably. At least too much for my appetite or my risk appetite. I'm like, Omar, you've got to change how you flip. You've got to flip to FHA buyers. You got to flip to VA. You got to flip to USDA. You got to flip to low down programs. And sure enough, this morning, like a day later, Mortgage Business Daily actually said in week on week that I think it was VA and USDA loans went up. And folks, that will continue in the winter. The people that will be buying will disproportionately be low down first time home buyers with assistance. And why? Because they've been ignored for 2 years. You want to talk about the offers that got no love the last 2 years? That's it.
Yeah.
They're going to get all the love and attention now.
Right. I'm seeing it in my business, and you're absolutely correct. All the government agency loans, FHA, VA, USDA, more down payment assistance programs are coming, you know, and that's probably a longer conversation on pros and cons of that. But for sure, you go from a market where those things didn't even get considered to a market where they're getting accepted.
Oh yeah.
You're definitely going to see more of that, and that's a trend, you know, to your point.
Yeah.
Guarantee that continues over the next 6 months.
Yeah. So again, folks, the market, even when interest rates were 18%, we still did millions of transactions. We're just not going to do 7 million. We're going to do 4 million, 3.9. So business will still happen. First time home buyers, FHA, VA will do more. Like, I don't know what the percentage was. I wish maybe you can look this up. 2021 origination. What percentage was VA loans? I'm going to guess low, like 1 or 2%. Just guessing. Blind ass guess. Let's say 2%, just for fun. I think 2022, when it's in the books, it's probably going to double or might be triple. Because again, we're going to see total transactions down, which in the quantity up in VA, which disproportionately is going to make the percentage look bigger. So we might see 200%, 300% increase in VA, 300% increase in FHA, just because less total transactions, more quantities. It's a big percentage jump, I think. Yeah,
for sure. I'll look up those numbers because I want to say offhand, like traditionally, I think FHA is like 8 to 10%, VA is like 3 to 4%.
Okay.
I don't know how shrunk those numbers got in 20 and 21, where like conventional and cash just ruled the world.
The world, yeah. It's gonna be. I bet you it's gonna be real. I bet it'll be half the normal. Just a guess.
I'm gonna look those up now. I'm curious.
There you go. We'll talk about it next week. Well, again, I think there's going to be a lot of deals being done. If you are a first-time home buyer, FHA buyer, you need to work with Matt, the mortgage guy. He's going to help you understand how best to use seller credits, and that's what you need in a mortgage broker today. Is how can I best use this 2-3% based on what you're trying to do? So, how should they reach out?
Go to greatmortgagebroker.com. If you're not subscribed to Matt the Mortgage Guy, go check out the channel, because these are the type of things I talk about. What's your max seller credit? Buying an investment property, you're buying a primary residence, different max seller credit. You want to get a good idea of what's allowable before your agent goes writes a contract that's got you more credit than you can use. And there is, strategy around, this is the property I'm looking for and it's an investment, and here's the number I need on a monthly basis. Okay, what price, what seller credit, what buy down, all those things. You can plug in and strategize before you get in the contract. Some people are scrambling once they get in the contract at 515. How do I get a payment under 2,600? Well, we should have talked about that before you started writing offers.
Yeah, folks, please, if you're in the game, you're going to do something this winter, you're going to find a creative deal, motivated seller, work with Matt the mortgage guy just to get ready, so it's a little less stressful. Thanks, buddy.
Do that there. Greatmortgagebroker.com. Thanks, Mike.